The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 3rd of May. Thank you to our hosts, great programming, and let's hope that we can keep that up all the way through Wednesday today, go through to 5 o'clock. Don't forget, Andy Hecht has a webinar tonight. Check it out. Should be fabulous. He's really, I think here at TFNN, we've really appreciated the kind of depth that he's added to the whole commodity area. It's all very well trading it in patterns, but discussing it in terms of fundamentals, that really adds another dimension. We're looking at a Dow right now, down 59 at 20,890. S&P is down 10 at 2381. Comp index is down over 40 at 6,054. The VIX index is up 53 at 11.12. The E-mini that you can see right here is down 8. And one of the things that I'm looking at is that let me just move this along a little bit, is that the cup formation has had all this time in which to break above 2397.25 in the E-mini contract, the June contract. That was a peak D in the Chapman wave. It's also Chapman wave 5 in my technique that I've been developing over the last couple of years. And went to a Chapman wave 5 to the downside at C. It didn't make a D like the Dow did, but instead it had a really nice arch formation, successful test, and rebounded. And what did it do? Instead of going to 2398 to break the cup formation left side high, it stopped dead at 23, right here, at 2394, I believe, 94.75. I'm going to put that in. 73.94 point, no, 73.94. 0.75. And what's important about that is within the context of time, you have the stochastic holding at 85%. That should be very good. That D has been rallying. My contention is that that takeoff gap that we saw right there, or was that the French vote, on the evening of the 23rd, 24th of April, I think it occurred as an emotional response because it should have gone much, much higher. Also taking time, I consider time to be as important as price. I do a lot of work with time relationships. Says that a left side, right side price time match could go to the 8th or so of May, but having usurped all this energy and not having gone higher, especially when the weekly chart pattern said it should have gone higher, I relied on the technicals, and I continue to rely on the technicals to suggest that the pattern that we're forming in the weekly charts is actually key to what we're going to see between this Friday, this coming Friday, and the following Friday. The 120-minute chart has just made merely an arch formation, yet another cup to an arch to a cup to an arch formation. This time we've gone through the arch, and we'll see if we can get a little bit of a cup formation here. Not so sure. So let me do this. I want to finish. Quickly the different areas, and then I want to go to the emails, and then I want to talk about Facebook and what I'm looking at here in the shorter term. So the QQQ series has potential for one more spike to the upside. It doesn't have to do it. It's already completed a chunk of work. But there's a chance that the QQQ could go to 136.35 or a little higher for that leg D. Peak G right now would be the alternate count. But what's really important about what I'm looking at this particular moment is that in the Chapman wave QQQ series notation, I'm calling this a peak C should just double check because I'm not sure. 37.38, 37.40. Yes. So this is a peak C. It should go to a D. Doesn't have to go to a D. It is 120 minutes shorter term. It can be overweighed by the larger daily. But I'm looking at everything here that says we are very close to some kind of at least a short-term top. Maybe it'll take time. Maybe it'll take time and price. But at least at this particular point, the MACD is at 96%, very strong, but turning down. And the on-balance volume has gone to a peak D at a high. And it says, right, this is where you've got to start to be careful. And if you look at the very short-term red line here, it's almost about to cross the black line. We'll see what happens. If that occurs, other things can happen. So I'm watching the parameters, 135.50 on the a support that needs to hold over the next 2-3 days, and the 136.40s is probably upside limit, at least short term. Good. Now we can go quickly to the IWM. IWM has this failure at a peak C in the daily. I could give it other names. It's a peak C. It'll be unusual to fail. It can happen because there's a leg D, a potential peak D in the weekly chart. Technicals are very poor, and the monthly chart is a peak C, but it's the daily that made that peak D with a very sharp pullback. Hey, what is a peak D? I always need to do this because there are new people all the time at TFNN listening, just tuned into the channel, getting very interested. In the Chapman methodology, we look for a slide that takes you to a most obvious low bar. From that low bar, you merely count each successively higher peak alphabetically in sequence up to a G, but it's at the fourth highest peak, peak D, that other things can happen. You'll see how many times, not how many tens of times or hundreds of times, how many thousands of times. And actually, since I've been here, and since 2002 or 2003, I would have to say how many tens of thousands you've seen. What can happen at a peak D? There's one right there. There's another one right there. Okay, here we go. We want to look at I want you to look at gold. When I last looked, gold was down, still down. You remember I said that we're going to see how this 200-period exponential moving average of 1246 is going to hold, how it's going to hold. The MACD is still very negative. Stochastic is very negative, but you've got the Fed coming out with some kind of report on their beige book this afternoon, and we'll see what happens with the Fed minutes, what the notes say. And this is a peak C in the weekly chart. It's right at that crossroad. It's at the support. Look at this trend line support. This is a very important moment. My contention has been talking about, if I just go to chart patterns, see the GDX makes this beak. This beak, this long downtrend in a very quick time frame, when that concludes, there can be a very sharp move to the upside. And my contention is that the sell mode that I've got still in the Dow, we remain short in the Dow, is telling me that if the Dow starts to break really important 20,800, 20,750 support, bonds should rally. Bonds should have a pretty decent rally. So this is going to be very important this afternoon. What do bonds do? What does gold do? What does the dollar do? Dollar right now is at, trying to rally, big deal, 99.14, up 17 cents. I'll be back. Basil Chapman, we'll talk about crude oil, and we'll go into we're going to the TLT a little bit in greater depth, and I'll just show you the 10-minute chart as we're going in.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
In my newsletter, what I do every single day is I spend a lot of time on this because it's both an educational thing for my subscribers, but it is for me. I'm learning all the time. I don't believe in stagnation because that's just, you're going to repeat the same thing over and over, but at a certain point, you have to have that next level to keep your interest. I mean, otherwise, what's the point? So my fives, Chapman Wave fives, you can see here in the Dow daily. This is the same daily chart on the left and the right, except the one has the MACD, moving average, convergence, divergence, and the stochastic. So what I did is I said that there's a good chance that this is not going to be a Chapman Wave 5 at all. It's going to be more like a Chapman Wave single leg A up if certain levels are taken out, and they're taken out fairly soon. So I give a comprehensive look at this particular pattern. Then I go to, where's the day? This is, if I can find it here, they're so tiny. That's that. This is, and this is the 120-minute chart. And what I discussed was, in fact, I showed the pattern. I said this pattern is making lower lows and lower highs. The stochastic did rally, but the price didn't. That's usually a big negative. And that the MACD just shows no signs yet of stabilizing. So here we are in real time. And I'm going to just do this to show you. I made them kind of faint because for me it was an exercise and I was making it more background than anything else. So transparency, 0, transparency, 0. So those were all there. I'm just showing you that I had them in background so that you can see them. Transparency in 0. So this is the Chapman Wave 5 that I talked. Yeah, it was the whole idea was stimulated by the Elliott wave, but at this point it has, like, I couldn't even tell you how many rules it breaks in the Elliott wave. So it's got nothing to do really with Elliott wave. It has to do with other things that I use. I use the Chapman wave as well. And here you are in leg D, happens to coincide with a trough 5, a leg D down, which will be a trough D if in a 120-minute chart, if there's the next bar closes above the low it was made at 20,874. And then what I normally do is I make this an obvious, I put a little circle around to say, hey, from this moment you could get a bounce. Okay, so this afternoon is going to be very important for a bounce, a possible bounce. And that bounce, I'm not sure that I'll have a 5. I might have a spike to the upside, make it an X, and start another 5. I have to wait and see. But you can see the stochastics, okay, it's not great. But the MACD isn't showing any real sign, even though it's gone to a leg D to the downside. So that's the 120-minute chart. Here's the daily, just keeps going down. This is now what I put into fade fade it because it's background. I'm thinking more that it's going to be a B minus if there's a sharp pullback by tomorrow or Thursday. All right, let's get back to our story because there are things that we want to look. Here's the 10-minute chart. Nice bounce off the low, kind of corresponds with that potential Chapman wave 5 in the 120-minute chart. Okay, so now the dollar is trying to find some support. I'll give you parameters. If by this afternoon at 4 o'clock, the dollar is pulled back and it's underneath 99.81, about 30 or 40 cents lower than where it is now, there's a good chance it's going to take out the low. If gold has a nice bounce off this 200-period moving average, I'm going to take that fairly seriously, at least for now. Why? Because the pattern that we looked at, this is a Chapman wave stalk leg formation. Look at the TLT. It's done the same thing. And that's very interesting because it's trying to form a base here because the stochastic's trying to turn up and 22%, and the on-balance volume is held very well. The MACD histogram's improving a little bit, but that says a long way to go. That says that even if there is a bounce in the TLT, probably it's going to take a couple of days to shake out before it really gets going. Might have to be Monday or Tuesday of next week before we really know if this H pattern going to a lowercase m is going to break out into the 125.50s or whether we're really stuck in this trading range. And that's going to be very interesting. So I wanted to get to that. Crude oil, I had a couple of questions about crude oil. Look, crude oil has the pattern that I call the Eiffel Tower pattern, straight up, straight down. I've been discussing that for a couple of weeks here. There's the same thing in the weekly chart. I just think crude oil is kind of stuck. And I wouldn't be surprised if we are really in the big scheme of things on the way to crude oil going down to the 30s and then tries to rally and then maybe going to the. I wouldn't be surprised if in 3 years' time we're looking at crude oil probably in the teens as a glut, just a massive worldwide glut of oil is everywhere. Okay. Got that out the way. Meantime, on the very short terms, this is the stochastics making the lowercase W formation, and that W formation says, yeah, we could have a bit of a rally here. So we've got all the little nuggets in place for some kind of a reversal. Maybe this afternoon, market doesn't quite like what's being said, and we get bonds that rally because of the market coming down, and yields actually pull back and says, hey, the Fed's a little nervous about the economy right now, which is not what people are thinking. They're thinking things are good, therefore the Fed's going to talk about raising rates. I'm just wondering, I'm just giving you some kind of panorama, big picture. Okay, now a couple of things. So George in New York, remember he called in yesterday, I think it was day before. We were talking about NVO. It was yesterday. And he mentioned that it's acting very well. I said to him, yeah, I do like it. This is kind of the area up against the 200-period moving average. It looks good. Novo Nordisk. And this is in the pharmaceutical area. Very strong monthly chart leg up. Very strong leg C now. Why? Because it came out with earnings today, and it's up 2.30. And it's at 41.23. So the big thing is now how do you get in? Because this is a gap up to a leg D. If it was a Friday, I'd say, great, you'll have a good chance to get in next week. But this is pretty good. So I'm just going to suggest, because it's doing things correctly, it has turned around. Any pullback could start the position. I would not get the full position here because the 200-period moving average in the weekly is up at 42.88. That's just $1.50 away. So I would say you could even at 41.23, you could just nibble on this right now to get a very good feeling for this is not the position. This is like a pilot-like position. Just a couple of shares, all right? That's not it because it should pull back. And then I would place an order where we were yesterday at 38.90s. I place some order there, but I really would like to see it go down to the 36 area, somewhere between 36 and 35 over the coming 4 weeks to 6 weeks. And then I think it could be ready for a nicer move up. So either wait, try to fill most of the gap. It might take a little while, but I would wait. I do like it. Now, I wanted to quickly do this. We've got Tesla. Tesla has made a peak D at 327.66. The MACD is poor. The stochastic is under 80% in the daily. It is leg E in the weekly and leg C in the monthly. I contend that this pattern here says that Tesla is going to trade between 305 and 298 over the coming 2 to 3 weeks. This is the way I'm looking at it. Could be totally wrong. That's what I'm looking at. If I'm looking at Facebook, Facebook's coming out with earnings. It's making a leg D with a double top there, 153.44, 153.48. Okay, it's a 2-bar potential reversal. However, and I'm hearing quite a lot of things about Facebook. A lot of people are saying, we don't use Facebook, we want to use one part of Facebook, but we're really not using Facebook anymore. I wonder if their outlook is going to be a little bit of a disappointment. It's still a fantastic stock. It's at 152.05, down 73 cents. I will talk a little bit more about it when we get back. And Basil Chapman, Tiger Technicians Hour. Dow's down 32. S&P's down 7. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. So as we're getting closer to the Fed meeting minutes discussion at 2 o'clock, the market will probably come back. That's the way it usually does. We'll see. But in the meantime, just real quickly before we go to Scott waiting in line here, I wanted to say, because I might forget it, DDD, which is 3D Systems, earnings come out after the bell. Had a quick email from one of my subscribers because I featured it a while back and he had bought it. And what to do. And I'd say to him, just take a little bit off here, whatever the earnings are, take a little bit off to reward yourself for being patient to get to this level, but keep your core position, at least a chunk of your core position, and maybe just a little to reward yourself. And if it gaps down, that's okay. It's within a trading band, but I would definitely take something off. Let's go to Scott. Hi, Scott. How are you?
Well, Basil, the ATM is setting itself up again here. So what do you think about CX at this point?
You know, I had CX for about 4 days trying to get it in the low nines, couldn't get it. And then this morning I'm looking, I'm saying $9. Well, what's going on here? So they must have had a dividend payout. Something must have happened because the price is now 20 to 30 cents less than it was just the day before.
I think it's just a market fluctuation. I mean, this is like 15, 16 times CX has done the same thing. And it's really struggling to stay up at that 940 range and keeps falling back.
No, what I'm saying is that I had a price to buy it even yesterday, which was
I understand what you're saying, and now it's dropped even below that. Right. So the question is, at this point,
what I'm saying is that the price, it's trading at $8.88 right now. It's down 6 cents. The chart formation is exactly correct. But the pricing here should be about $9.22. So they did something between last night and this morning to change the price. So I need somebody to. I didn't have time to do it. I know that there was earnings report, but there must have been. I don't know what there is, or they spun off something. Whatever it is, the trading price is all being calculated in a different way. That's what I'm saying. That like yesterday.
I understand. Yeah.
Yeah, the other day the high was up in the 947 or something area.
Right.
Now that price, the same bar, the same everything has the price as $9.15. So I still like it. Nothing's changed. I just wanted to explain that I mentioned yesterday. Was it yesterday? Yeah, about CX. Is that there's a Chapman wave overlapping wave. It went to a peak B in the weekly chart back on the 27th of January, and then it pulled back. And then under it, it had a gray peak A, peak B, and that spike to the upside got both the previous B and the new B as a C. And that usually takes it to at least a D. It's called the Chapman wave overlapping wave. Doesn't give you a time, although it's usually fairly quick. So this CX, it must be trading ex-dividend or something.
Also keep an eye on NVIDIA because it seems to be slipping back into that 99 range again.
So let me just say to you, I do still like CX, but I'm going to say to you that I needed a day to figure out what was going on. I still haven't quite figured it out. It held the 9-period moving average. I think it's going to be back on your radar within a couple of days, so don't take it off. It's just that I had to wait. I didn't even want to give numbers to buy it because I wasn't sure. And I would have actually put it at the 9-period moving average of 882, and now it's at 888. So that's the thing to watch real closely, 882. If it closes under that by the end of the day or tomorrow, that is a little timeout. If it holds it very well, it's a good chance it's going to go try that high that I was talking about. Now, NVDA, is very interesting because it fits this whole category of when a cycle is complete, I always look to the monthly chart to give me all the clues. The clue that I've got from the monthly chart is that the stochastic, although it's at 83% and still very good, is declining. The MACD fast-moving average is actually holding quite well. So it's taken 3 months, even though the semiconductor, it's part of the semiconductor index, but the semiconductors have done fantastically, gone to all-time highs. NVIDIA's been stuck, and I'm just thinking that their business model might have changed a little bit, and that's what the price is telling me. So I think I'm going to say to you that NVIDIA, I've got in a downtrend, but within it, because it was a favorite for so long, fund managers will still drift towards this. So I think you're absolutely correct. Use it as an ATM. Every time it pulls back, if you want to grab it, get out with a quick pop to the upside. That's the way I'm looking at it. But I would not be surprised if, in fact, you start to see lower highs and lower lows. That's my thinking at this point. But it doesn't mean to say you couldn't have these nice intraday trades.
Well, you know, and to all the listeners out there, just remember what happened with X. It can happen to any one of these stocks at any time. You have to watch this stuff. You cannot put anything in the oven anymore. You got to watch it every second.
Absolutely. And that was a peak D in the monthly for U.S. Steel. And that says to me, that probably what we're looking at in high-grade copper, I had a question about FCX. High-grade copper is telling me that there's probably, oh, look at today's move, that the commodities have been under pressure, and that the high-grade copper is internationally telling me that probably there's some kind of a slowdown occurring in the worldwide economies, just right at this particular moment. We'll see.
Let me throw this in. I made most of my money on commodities because one thing's for sure, most people can't watch everything all the time, and if you have to leave something in the oven, let it be commodities, because commodities are commodities. They will go up sooner or later. They will have a need. You always
need commodities, but you just got to be careful of the other trends, the shorter-term trends. Hey, I agree. So keep in touch, and good luck with your NVIDIA and your CX plays.
Thank you again, Basil.
Thank you for calling. So I just wanted to do this. So FCX was a question. FCX is Freeport McMoran. Copper and gold is trading at 11.97, down 75 cents. That doesn't sound like a lot, except it is 6%. And it is 6% over and above the 17 that it hit back just 2 months ago. No, back on the week of January the 27th. This is a heck of a move. 17 down to 12, 5 points. Whoa, that's almost 30% or so. So I would just say be careful, because this is telling us a story. And that's the story that I'm looking at in the market. I'm looking at it through the auto sector, through many different sectors that are really telling us about the economy. And wood, W-O-O-D, is just starting its pullback. I think it's made a short-term top at least, could be a weekly top, but monthly is still very strong, and that's the iShares of the Global Timber and Forestry ETF. So I'm watching this one very closely, as well as HGX. A couple of questions I still get about the banks. What was it? Which one was it? Okay. So DDD, let me just go back to that, because I did a whole thing on it when I did my last webinar on DDD systems, as well as SYS, which is Stratasys Limited, also in the 3D area. These stocks are acting very well. Here's the left side, right side price time match I had on it right there in the weekly chart. They've all done well. I think they are getting ready for some kind of a pullback. So all I'm going to say, just back to Chris, is that, Chris, yeah, I don't feel uncomfortable taking a little bit off here as money management. I'm getting signs that it could pull back very soon. Not all that much, but a percentage, a decent percentage. So that's what I'm recommending. Keep your forward still looking very good longer term. Basil Chapman, Dow's down 24. I'll be right back after these messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So I had a question from Julie about APC. So APC is Anadarko Petroleum. Here's the monthly chart. Let's just take it from July-ish of August or so of 2008. It goes peak A, B, C, D, pulls back. Then it has what we call single leg moves up. It goes to a peak E, pulls back. There could have been an A and then a B and a pullback. I could have renamed it that way. But everything about the stochastic and MACD says these are rogue waves to the upside. Starts a brand new move right here. And this brand new move based on the stochastic and the MACD says that June of 2012 in the 56 area, what was it exactly? Yep, 56.42. It goes to a peak A, B, C, D. Technicals are still good. At E, it plummets. It goes from 98.47 in 3 months. In 2 months, it goes down to 73. That's a big move. And then it has a spike to the upside, what I call the right arm extension. And that occurs when one of the technicals is very strong, the other one just kind of follows along, and then they fail together, and that goes to peak F right there at the top around about August of 2014, I'd say at about 115. And what does it do? It goes trough A, trough B, and trough C to the downside, and it has quite a spool down to 29. I would say 29 from 115, 30. So this is, what is a 75% decline. Now what we're looking at is it goes peak A, peak B, peak C. But look at C. See those doji candles? You see this midpoint here between the upside. It's like a sine wave. It goes around, it goes up, comes down, goes up, comes back down again. Now it can't even break above this trend line resistance, and it pulls back under the 200-period moving average. I'd be real careful about APA. Trading down 448. Oh, down 448 at 51.80 with a gap down today. Look at that gap. And if you're looking at the weekly chart, look at this. Weekly chart has got a peak D right there, and look at that pullback from a peak D. Trough A, trough B, trough C, trough D, trough E. And now you have to look at it and say, it better hold this key support level. That was the buy point back in August of 2016 in the weekly chart at 50.23. And we're trading right now. The low today is 50.99. So be careful. Yes, so the answer is, yeah, look out. XOI. Also, not a good chart in the USO, which is probably the one that I really want to look at. Yeah, look at that. The lowercase h goes to a lowercase m. Remember, that's the pattern. Here's the drop. Here's the V-shaped pattern, inverted V, the Eiffel Tower, down arrow at peak D. This is the USO, the United States Oil Fund. Just be careful. This is the area where it better find support. And this afternoon's news is going to maybe help a little bit. We'll see, but you'll still need a couple of days to sort things out because the technicals are so poor. Next thing is, Bob wanted to know about FCX. Is this just a consolidation from the January highs? or a downtrend. At this point, I have to consider that it's a downtrend. Valet is right here. Yeah, I don't like to see the stochastic and the MACD have a really nice rally and the price fails. That just says, wow, the next move down with the technicals could take it lower. But at 849, 811 is the 200 period exponential moving average in Valet. Price-wise, it's very close to some kind of support. Percentage-wise, that's a big move, 40 cents. Another 4%. However, it's down 34 cents today at 847, down 3.9. I'm just suggesting to you the monthly chart is okay, but this is a critical area in the 8s for Valet or Vale, SA. All right. Next thing I had, so with Jason, we were looking yesterday at SPG, I mean, and I said, I'm not ready. I just don't think it's ready. It's got a real problem, and I'll just give you parameters. 163 is what it's got to hold, and it has to break upside the 172 or higher area, hold 172 or higher, really 173s. And then I'm going to say, okay, a larger H pattern could unfold. So trading down 248 and 166.31, be real careful, Simon Properties. Yeah, that's all I can say. The monthly chart still looks just horrible. I can't believe it was one of the great winners. And then if you want to look at the 10-year TNX for GT, TNX, dollar, TNX.X. Yeah, there's that H pattern. This is going to be very important. What happens this evening, this afternoon, this evening? Let me just get out of this for a second. Close workspace. Let me go to my bond chart right here. The triple yield chart that everybody seems to love. My triple yield chart, the weekly chart, shows the 30-year T bond. That's the TYX white. The brown is the TNX 10-year, and right here, 10-year. And the 5-year is the cyan. And you can see stuck in a trading band right now. Made the cup formation, Chapman wave drop bucket formation in my CD introducing the Chapman wave methodology. The drop bucket pattern is chapter 22. And now what we're looking at is you've got, I don't see it. At this particular point, no matter what the Fed does, I think if the market starts to drop quite sharply, money will go into bonds and yields will come down. That's just my thinking at this point. I don't really see bond yields screaming to the upside. Could be totally wrong. Could get a U-shaped pattern with the second U forming right now. So I'll give you the numbers. The TNX at 22.9, 2.29%. A break into the 2.39 area within a week is very positive for bond yields, not good for the TLT or bonds. And the 5-year needs to get to 19.2, so 1.92, it's at 1.82 right now. And then you're looking at something very different. Okay, so that's that. And the next thing, so that's, DuPont. That was a good question. I haven't really studied DuPont for a little while. It used to be one of my backups for my Dow Quartet. Not good. DuPont is trading down $1.18 at 78.78. Let's look at DOW. This is not the Dow, this is Dow Chemical. Wow, it looks just like DuPont. Of course, they've got this merger thing going on. So I'm looking at these ADM. I haven't looked at ADM for ages. This will be a treat. No, it's not a treat. Down 10, 20 cents at 41.47. What a smash to the downside. ADM is Archer Daniels Midland. Ooh, not good. So, yeah, there's a real problem. Monsanto, same thing in the same category. Monsanto's holding very well. Peak A, B, C, D, E, F. Yeah, holding well. Technicals are not that great. I think it's going to start pulling back. You know what? I won't have time in the break. I'm going to put it in my notebook. Notebook, if I can find my notebook. MON. Let me put this over here. MON at 116 question mark. All I can say is that it's a little choppy right now. It's held beautifully. It's just getting a little choppy. I'm going to be watching this very closely. So that was that. And then one more is CX. There was a stock dividend. If you had 100 shares this morning, you now have 104. Okay, I knew there was something weird, but that was a big percentage move. Good. He has a question. Sandip wants to know about. Thank you for that. Okay, so nothing has changed other than the dividend. Please see your IMs. Oh, we've got McKim in Denver. Can you hold on and I'll be right back, McKim? All right, we'll be right back, and we'll be looking at fuel, F-U-E-L, F-U-E-L.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. As we go to the next caller, I just want to say the quick question I had by send up on Twitter, TWTR, trading at 1841 up 17 cents. Yes, it's in play. I don't know if I want to buy it at 1841 unless you just nibble at it. I really would like to look at it again between 730 and 675, and that's where I'd be looking at it because I think it's now in play, and that's all I want is something that's in play. Let's go to Mick M. Is that Mick M or Mike M?
It's Mike.
Mike, okay. There should have been a comma there. Okay. Mike, you wanted to look at fuel. Do you have any position in it, FUEL?
No, I don't have anything yet. I just came across one of my scans, and it kind of looked pretty good at the start anyway, so I thought I'd give you a call and see what your thoughts were on it.
So let me just do this. I don't want to run out of time because this is a very interesting stock. You see the cup formation that it made from, I'm not going to have a chance to put in the notation, but the high that was made on the 3rd of April at $5.61. It makes this cup formation a very steady move to the downside, and then it has a news-related strong move up on the 24th. I say news-related because something must be going on. But what's really important is the high that was made at 561 on the 3rd. The high that was made at 577, but the close of 560 is really what I'm looking at. So it's failed so far to close above the previous high. The fact that it gave up it gave up more than 50% of that gain from the lip on the left side to the trough in this last move, and then rallied back again, says to me it's in play. So I'm going to make the suggestion. I know you must have, this is a scan, so you weren't watching it, now you are watching it. So I would do this. At $5.44, I'd say I think it's in play because it looks like it wants to retest the 590 area. The 590, yes, the 590 area, the high that was made on the 27th. So if I'm looking at this and I'm looking at the weekly strong and the monthly strong, I would never do this, but I'm going to tell you right now that the way it's looking, it's in play. The MACD and stochastic are good, not great, not in any way as great as it was, but the fact that it's had 3 green candles after the big red one, I'm going to suggest to you, if you want, start a very small position here at 5.44. Don't have a time sequence in mind because the weekly chart is still looking very good. But I'd have a price sequence in mind. If by, today's Wednesday, if by Monday at 2 o'clock, if it is held and it hasn't closed under $5.13, I would then add another small position. Now, if between now and then, if it takes out the high that was made on the 27th, the $5.90, at $5.91, I would add another small position, and I'd treat the one that you would get now, if you just nibbled at it at 5.46, I'd keep that as my core position if I could, and I'd treat the next one as a trading position at 5.91, and that one has to have about a 30% stop, a 30-cent stop.
30 cents, okay.
And let's do this again. If you have a chance and you're able to call on Friday and you've done something, let's look at it again Friday or Monday. I'd love to follow this up. In fact, I'm going to make a note now because this is nice action based on the technicals, but it's also nice on the price action over the last 3 days. So I like it. It's holding well. It's almost regardless of the market right now, it's doing its own thing. It's up 3.61%. So thank you for bringing it to my attention. Let's follow it up, and I'm just suggesting get a position right now, put a stop that you're comfortable with. Let's see how it goes in the next 2-3 days.
Sounds good, sir. I appreciate your comments.
I appreciate your call. Thank you so much for calling, Mike. So, folks, Basil Chapman, Tiger Technicians Hour, signing off. Dow's down 16. We'll see what happens after the Fed today. I am thinking that we are really close in the QQQ to making some kind of at least a short-term top. We'll be back tomorrow. Have a great day. Have a great rest of the day. Check out my opening call. I think you'll find it really informative and hopefully helpful and beneficial and profitable.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.